Hello, welcome to the second session of the loan part. So we have discussed previously about what is loan, how it get benefited, how we can take loans, and what are the participants, characteristics of that. So in today's video, in today's section, we will discuss about the types of loan. So usually we have two types of loan, which is secured and unsecured. Okay, so if we take the example of a secured loan, so we have given one note example, and beside that one building is there. So in secured loan, if you want the amount of a 5 lakh, so we have to collateralize, we have to give something to bank or some financial institution to take the loan. So here we can see that we have a 10 lakhs building with us, and we require the 5 lakh loan, and we have gone to the bank to take a loan of 5 lakhs. So bank can give the loan on the what we have asset with us, so it's come under the secured loan. So the secured loan example are home loan, car loan, and the loan against the property. So most of the know the home loan we are taking, if we pay the interest and all thing, after the period end we can have a home or something we have invested. Same for the car, same for the loan against the property. But the thing is that in secured loan, if you can't able to repay your money, so whatever collateral amount, collateral building or something you have given to the bank, so it is come and it will be taken by the bank when you not able to pay their interest amount. So that is the thing. So in this also gold loan also came. So in this we can add the gold loan also. For same unsecured loan where the we did not uh, give collateralized amount to the bank or secured thing in the bank, just we take a as a credit to the from the bank as a advances. So the loan amount should be less or in this part as per the secured, because it will not take a collateralized amount. So collateralized thing. So for the credit card is an example, education's a loan is example, and the personal loan is example for that. So unsecured and secured loan more different is secured loan have the low interest as compared to the unsecured, because unsecured did not have the uh, back end thing in this. So most of the thing are trending now. So one of the news you heard about HDFC, they have more car loan around 9,000 crore. So they are going to sell that loan to the other financial institution, banks, and many broking industry, large broking industry, to avoid their deposit clashes with the loan part. So this is a more interesting news. So after 30 September, before 30 September, they will release that part to maintain their deposit in the bank. So we'll wait for that. It is the first time they are releasing the car loan to the other party. So it is a series when the ABS MBS will come and they will take other bank will keep this thing and take other credit for the other thing. So this is for types of loan. If we are done with this loan part, if you have any questions, please drop a comment on this part. We'll surely explain this part. If you not have this, please like, subscribe this part of types of loan. And the next part is more interesting. We are taking one of the most important part of a reconciliation. Shivraj is with us. If any, Shivraj, you want to add anything on this part?
Yeah. So almost you have covered in a portion for secured and unsecured loans. I just want to add one thing. I'll just summarize it whatever that you have discussed so far. If we talk about secured, so it means bank will ask you security before offering you a loan. So that would be your secured loans. For example, let's say as you said, car loan, right? If you want to buy a car worth of rupees 10 lakhs, bank will ask you to deposit your down payment, let's say 2 lakhs,
Yes.
and remaining amount bank will give you a credit facility to buy a loan. So, but again, as a borrower, if you apply for a loans, then you will have to transfer collateral sell rights to the bank, because if as a borrower, if you default on a payment, then bank will have a direct rights on your assets, so bank easily can sell it out and recover their money. Same applies to the home loan, same applies to the gold loan or any other assets, right? If you see any loan is if any loan is backed with the asset, so it means that loan is basically secured by assets.
Okay.
Right? If that borrower is not able to fulfill the obligations, then asset will do it. And now
Yes.
if I talk about on other hand, let's say unsecured loans, because unsecured loan is given on the basis of, let's say, the terms like without asking for a collateral, it means assets, no gold, no property, no land, no assets, nothing.
Correct.
We just discussed with verbal term like, look, if you want a loan, then we'll give it to you. But if you just compare, two loans, unsecured loans are more risky, but for a banks, most of the unsecured loans, they are like profitable. The reason is bank charge more interest payment, like 36%, 46%. Take the example of credit card, take the example of personal loan, 15%, right? 36%, 18%, 22%, which is a high interest rates. And if I talk about secured loans, average interest rate that you would say, which is around 10 to 15%. All right. But yeah, so this market is very big. I would like to means I'm also interested to see how you means how you will decode that the linkage of these types with the corporate loans like loan syndication part and all. Yeah. All right. So yeah, I'm done.
Thank you, Suraj. Thank you for adding valuable thing in this part. So hope you like this sessions. Please wrote your comments, whatever. We will work on the same and we'll have anything we have missed. We will add into the next part. Thank you so much all.